Hey guys, how's everybody doing? Hope everybody's doing well. You know me, I'm Tom. Okay, today is tax day. Not necessarily filing my taxes, but preparing my taxes to be filed. Let me get into some detail about that, because running a small business, you guys all have to do taxes every single year. Whether you're a regular, individual working for a company or you own your own company, you got to file taxes. Plus, too, with the new tax laws that have just been approved and signed, from the White House, that is going to affect a lot of small businesses and corporations. As you can hear in the news already, corporations are handing their employees, bonuses. They're reinvesting into their companies. So these new tax laws are very important for a lot of reasons, especially for small businesses and corporations. They really affect us because they were at a much higher rate, and they brought those rates down. And it's not the same for everybody. I think it went from like 30% to 20%. I might be wrong about that, but I don't worry about that so much, is I just give all that to my CPA. But let me jump right into the topic of the taxes, and you see this big box in front of me. I'll explain what that is. But before I do that, it's Beer 30. It's been a long weekend, and I'll tell you what I've been doing. Okay, number one, let me just jump into this. Chef Fabio, I got your T340 plate ready for you. So as soon as I get your letter, I'll send this out to you. And thank you very much for staying in touch with me constantly about this. I've been holding on to it for you, but I just want to let you know, here it is, brother. T340 side plate. Okay? All right, nomenclature plate. But anyway, there it is. It's yours. Bear with me also, too. I'm trying to do a little cooking. Multitasking. Okay. All weekend long, I've been at my bookkeepers. Okay? Now, her and I've been with her, she's been doing my books for the last 5 years. Okay? And what we've come up with, and this is because what my CPA told me, he says, look, I used to just hand him this big old stack of papers, expense this, 1099 that, profit loss statements, and it was just this big thing, and he had to shuffle through it and then fill in what categories he needed. And I said it was taking him a long time, and he was also charging me for that extra time. So he says, if I want to save some money with him, then I need to condense all my profits and loss statements or expenses on one form, okay, or two forms, so he can just go right down the line and he knows what numbers to key in. Because right now everything's electronically filed, okay? But as you can see, I label everything. Now these are all my receipts, 2017 tax and receipts, okay? And all weekend long, my bookkeeper and I have been going over all my expenditures, okay? I want to get to this. The most important form is the itemization form, but I'll show you this here in a little bit. But what's important is that you're running we're going to stick with S corporations and LLCs, small businesses, okay? What I do is that, like, I got, first off, let me explain this. In the state of North Carolina, I think this is in every state, landscaping companies, this is one of the new tax rules, landscaping companies do not have to charge sales tax on their labor. But handymen, maintenance guys, mechanic shops, any other kind of business has to charge now sales tax on labor. Here in North Carolina, it's 7.65%. That's a new rule. You got to then send that money to the state to collect taxes, okay, sales tax. So, and I've never had to do that before, so I had to itemize my, from my landscaping company, which I don't have to pay any sales tax on, to my maintenance company, which I do have to pay sales tax on. I have to produce the dollar amount, and then that way I have to send them a check times 0.0765, okay? So what I do is every category expenses, I have bundles of receipts for that particular expense in that category. Like, especially handyman business now, this entire stack right here is strictly Lowe's, okay? This is just Lowe's. And as you go through here is every other different expenditures like waste management, equipment purchases. That's another big thing this year, that you got to be able to submit all this before January 31st so you can deduct any purchases that you've made throughout last year. So remember, I bought the T340. Okay, that's kind of where this comes in. Remember, I paid $16,100 total. That's the purchase, repair, and everything for this bulldozer. Now, the bulldozer is going to be under the landscaping company, okay? So that's my big write-off for the year, okay? Because I have to write a lot off every single year, but you got to be careful. You can't go around writing more off than you make. Then you're showing negative numbers, and that brings up a red flag and you're going to get audited. So what I also did is I bought what I purchased is that trailer to be able to go up to New York and buy that other bulldozer, that T340, and that was $4,000. So I had a total of $20,300 in equipment purchases, okay? Now, that is all write-offs. So what you do is that you look at your total gross income, how much money you made throughout the entire year. Then you look at your expenses, your total expenses. Then if you're a company like mine that I have maintenance and landscaping, then I have to decide what category that each of these purchases falls under, okay? So the bulldozer definitely fell under landscaping. The trailer fell under my maintenance, but I can also flip that over to landscaping too. But the bottom line is it is for landscaping because it hauls the bulldozer, okay? It hauls the Kubota tractor. So I took all $20,000, all $20,300, and put it under my landscaping expense. But you've got to be able to justify that big of a purchase if your landscaping company only made $20,000 and you went out and spent $20,000 in equipment. That means you made zero. So that will bring up a red flag, okay? So another thing you got to do is look at stuff like I have an office here in my house of 600 square feet. I can actually charge myself office rental expense, okay? That's another thing you can do. Other things, clothes. You know, all clothes that I buy is for work. And then there's all kinds of other things. You can either write mileage off or you can write gas off, which is the greater of the two. Bear with me. And there's so many other things. Postage stamps, travel expenses. When I went to New York to pick up that other bulldozer, all the tolls that I paid, almost $200 in tolls, that was a write-off. So really, running a small business, everything becomes a write-off if it's under the right category of expense, okay? Now, I'm not going to go down every single one, but I'm going to read off a few for you, okay? Let me get on my reading glasses. You guys didn't know I wore reading glasses, huh? But I do. But anyway, this document here, let me show it to you. This is what the CPA gets, okay? This is an itemized form of expenses and profits, okay? And then it has your net total, what you've made, okay, at the very bottom. And that is what you pay sales tax on if it falls under the category of maintenance, okay? But let me just read off a few of these for you. Okay, also too, I can write off my insurance, accounting, subcontractor 1099, which I didn't hire anybody this year, business licenses, which is zero, postage and printing, supplies and material, which is almost $8,500 there. Business phone and internet, tools that you purchase, uniforms, equipment, maintenance, shop rentals, inventory on hand, okay? Shop rental, inventory, I already said that. 1099 out, that is money that you spent to hire people, okay? Fuel expense. My fuel expense was $7,000 last year. That was higher than my mileage. Construction waste, dump fees. HOA dues, I get to write that off. Equipment purchases, that's where the International T340 and the Maxi trailer came in. Equipment rentals, business travel, equipment interest. If you're borrowing money on equipment and you're getting charged interest, you can write the interest off. Homeowners insurance, mortgage interest. Now, here's another thing you got to be careful about, is earning interest on your money that you have in the bank. You gotta file that too. In other words, you got to claim that money. Equipment storage rental, medical bills, property taxes, vehicle taxes, office rent, which is my office upstairs, office supplies, and the total expense. Now, when you get your total expense, then you come in and you got another category where it's 1099 income. In other words, when you work for somebody like all my doctor's offices, they're going to send me a 1099. Wake Med Hospital System is going to send me a 1099. And here's another big one, YouTube. I make money off of YouTube. Guess what? That's a 1099. I made over $2,500 on YouTube last year. I've got to claim that, okay? It's it's money, it's earned income. So I have to file on that. And when you get your total gross your total gross income and your total gross expenses, then all you do is subtract the two and you get your bottom number. That bottom number is the amount of money that your company has made for the year, okay? Now, what then my CPA does is then he breaks out the differences of sales tax to the state of North Carolina, and then that's what I got to cut a check for. In my case, I'm going to be sending the state of North Carolina about $1,500 in sales tax, okay, on my labor. So there you go. Now, every year I've got to do this. So the next thing I'm going to do this week, I've got a big upfit job, building cabinets and a bunch of other things for this one homeowner. I got to slip out somewhere and hand him these two documents. And then he'll e-file everything, and then he'll call me up and say, okay, Tom, I need you to bring me 3 checks. One for his services, one for the state, and one for the feds. And the new one is for the state sales tax. So that's the new one. So I'll probably end up spending about another, it's going to cost me about maybe almost $5,000 from the CPA to the sales tax to the feds and to the state, okay? Which is about normal. It costs me anywhere from $4,000 to $6,000 a year in taxes, okay? And or charges by a CPA. My CPA costs me $1,100 a year. And my bookkeeper, not quite that much, but she still charges me money. So the bottom line is, if you stay and you've got to hold on to these for 7 to 8 years, okay? All this paperwork, because if you ever get audited, they'll go back 5, 6, 7 years, and if you don't have all these receipts organized, you're going to be in deep shit because you can't prove anything. So you've got to hold on to them. You've got to keep it organized. You know, God, like just a perfect example with the Lowe's. There it is, all of them. You know, every year I get a big bundle like this. Home Depot, Sherwin-Williams, Tractor Supply. It doesn't matter where I go shopping. Landscaping supply stores. I have to keep all the receipts for 7 years. I've got 8 years worth of boxes like this upstairs. So the bottom line is if I get audited, I can say, here you go. Everything's organized. Here's the itemized list of all my profits and expenses. and then I'll have the document, the final document from the CPA, which will then in turn verify the numbers here, because remember, all your numbers have to jive. They all have to match. They got to be to the penny. Okay? So that's why I spent the last 2 days at my bookkeeper's house, and we just sat down and did a marathon of making sure our numbers are right. Okay? And she has a special program that she runs in her computer, and it automatically, you know, it checks and balances everything. If anything's off, the program will automatically say, you know, your credit debit line's off, you know, and then we go back and look for everything, any mistakes we made, and then that's how we fact check ourselves, okay? But that's how you do it. Now, if you guys do your own taxes and you do your own e-file, that's fine, because you save yourself a crap load of money doing it yourself, because there's a lot of programs out there you can buy. Just upload them to your computer, and it'll just run you right down the list of what you need to, and, you know, input the information that you need to input. But if you don't know what the tax laws are, and you don't put the right information in on the right lines, you can get audited, man. I'm going to tell you something. Years back, I went to H&R Block, and it cost me $20,000 in back taxes because of one stupid mistake that was made at H&R Block. I told myself from that point on, I'll never go to H&R Block ever for anything. And I hired a personal CPA, and now I got a personal bookkeeper. It was the right choice, the right decision on my part. And like I said, I've been running my business now in Raleigh, this is going on my 9th year now. I'm in my 9th year, and I've had 0 problems. Okay? So that's the moral of the story. Stay organized, keep all your paperwork, make sure all the numbers jive and they're correct. Make sure that you have an input program, a tax program that you trust, and you know what you're doing when you're installing all these numbers, and you'll stay out of trouble with the IRS. Okay, guys, this is just a helpful tip here to keep you out of trouble with the IRS and do pay your fair share of taxes, and hopefully at the end of the year you come out of it with some profit. Okay, Tom out of here. You know what to do. Leave those comments, subscribe, thumbs up, and I'll catch you guys on another handyman video. Tom out of here. Bye.